MF Basics. My name is Lisa Pallavi Barbara, and you are probably wondering what this is all about. MF Basics is a series on all those simple questions that you had around mutual funds but were afraid to ask. So, we are going to try and answer these questions for you through a series of episodes on this program called MF Basics. Let's kickstart it with the most simple and basic question. Mutual fund hota kya hai? What is a mutual fund? Now, I like to think about mutual fund in terms of a basket of food. Think about a basket of fruits or vegetables or chocolates, even, whatever you prefer. For example, in a fruit basket, you have different types of fruits in different quantities and all bought at a different cost. Now, you may put fruits which you prefer, or you may put different fruits depending on health benefits, on the cost, and then you get an entire basket. Mutual fund is not very different from that, except it has nothing to do with food. It is a basket of financial securities. There can be different types of securities. They could be equity shares, bonds, a combination of both, or it could even be a basket just of gold. So that's what a mutual fund is. In financial jargon, that basket is called a portfolio, and the mutual fund itself is called a scheme. The person who decides how much of which security will go into that basket is your fund manager. Also, your mutual fund scheme is available at one price, just like your fruit basket is available at one price and you don't pay separately for each fruit. So is a mutual fund scheme available at one price. This price is called your net asset value or your NAV, and the NAV is published on a daily basis. It changes on a daily basis because it accounts for the market price or the estimated market price of each security in the portfolio. Now that I've answered what a mutual fund is and you have a general idea, let me try and answer some of the other questions you may have. क्या आप म्यूचुअल फंड में ट्रेडिंग कर सकते हैं, इंट्राडे ट्रेडिंग? Well, not really. You see, mutual fund is something with a daily price that is published on exchanges. However, that price doesn't change. Remember, it's a portfolio of securities, and the NAV is calculated actually at the end of every day. So your intraday trading is not really possible. And even if you want to trade in a few days or few weeks or few months, it's not really recommended because the volatility in your NAV is not what a stock price volatility is like. It's very low, and that's why it's not really viable for trading. Mutual funds really are meant for long term investing, long term wealth creation, and not for trading. So if you can't trade, are the returns really guaranteed or assured? Not really. Remember, we said they are market based prices of securities in the portfolio. So the price changes every day. And if it changes, then there can be no guarantee, right? The return you see when you're searching for which mutual fund to invest in, you see a return against it. That is not a promise of future return. That is a past return that you're seeing. And it is showing you, say, the 1 year return or the 3 or the last 1 month return. You can use it as a guide for what you might get in future, but it is definitely not an assurance or a guarantee of what you will make in that scheme going forward. What you will make in future in that scheme really depends on the portfolio of that scheme at that point in time. Now, what about cost? Do you have to pay a brokerage? Well, there's no brokerage per se, but there is an annual cost involved in mutual fund schemes, and that is already deducted from the daily NAV. So you don't really see it outright, but it is there. Now, mutual fund schemes come in two types. There is a regular plan and there is a direct plan. The regular plan has expenses like administrative fees, management fees, fund management fees, and of course, there is your distribution commission. The direct plan does not have that additional cost of distribution commission, and the direct plan is what you can buy on something like a Fires Direct, right? So, direct plan cost is lower than the regular plan. There is a cost involved, you don't see it, but it's there. Now that you know about the cost, is there a lock-in in mutual fund schemes? Well, most of the mutual fund schemes do not have a lock-in. There are some specific types like your equity-linked savings schemes and your fixed maturity plans or FMPs, which do have a lock-in, but 90% of mutual fund schemes do not have a lock-in. You can buy and sell at any time you want. However, remember we said do not buy and sell at any time you want, but think about the time you want to be invested in mutual fund schemes because they're really helping you in your long-term financial planning. What about minimum investment? How little do you need to begin your mutual fund account? For any new mutual fund investment that you're making, you need a minimum of rupees 5,000 to start with. Once you've done that, you can actually start your regular monthly investments, which are also called your systematic investment plan, SIPs, with as little as 500 rupees. We will talk a little bit more about SIPs in the later episodes, but you should know that if you're starting a new mutual fund account, then you need at least rupees 5,000 to begin with. So there you have it. You know what a mutual fund scheme is, and you know some of the basics around mutual fund schemes. In episode 2, we will be taking you through which mutual fund scheme you should invest in. Thank you for watching MF Basics. I'm Lisa. Stay tuned for a lot more on all things mutual funds.